All right, people, welcome back. It's Trader XO here once again with another market review for Bitcoin. What's the date today? It's the 20th of April, 2026. The time is just after 9 p.m. UTC. How is everybody? All good? Just give me a quick confirmation that you can see my screen and you can hear my audio, and we'll kick off today's session. As always, a special thank you to Prime XVT for sponsoring the streams. Anything said in today's video is not financial advice. It is just my view of the market. And it's certainly going to be an interesting few weeks ahead, I feel, now that we've seen price finally move out from the 65, 72K range, where we are starting to see some level of expansion, but we'll discuss that today and possible areas of resistance and levels that we just need to pay attention to. All right, before I proceed, I just want to, first of all, give a shout out to everybody who's joined the free mentorship. It's something that I've been running for just over a year. It's in partnership with Prime XVT, where I stream, or will be streaming, twice a week for April, May, and June. Primarily going over detailed trade setups using order flow, the DOM, the ladder, the footprints. So it's free to join, and in order to join, all you have to do is basically sign up using the referral link. Currently, there's a competition going on at the moment. It's probably going to be extended to 20 days, but there are some prizes available. I will also be adding to the prize pot, amount to be confirmed, but I'm thinking of adding a fairly reasonable amount, maybe $5,000 to give away to the top 10 traders in terms of volume. So that's just started now as of today or over the last few days, but that's something that if you do sign up, you get access to. You can take part if you want to trade actively. There's certainly going to be a chance to win 2 prize pools here, which I will be contributing, as I don't want it to be just about $2,000 here, okay? So moving on very quickly on to Bitcoin. Let's just kick off. So one of the things that I've talked about in the previous videos, I can't remember when I last streamed publicly. I think it must have been about 4 weeks ago. And one of the levels that I marked out, okay, was the fact that, well, I'd watch for price coming back into the 25 weekly moving average, because I think this is going to be a tough level to break. And if we are to break through that, then it needs to be convincingly, because historically, when we are in a downtrend, okay, you have to respect the fact that price has been in a downtrend. Yes, we've gone through a phase of consolidation here, with the markets having been fairly oversold, given that we've had one significant leg down, consolidation, second leg down, and consolidation. Now we're seeing somewhat of a mean reversion back into the bands, the weekly bands. Very similar in terms of what we generally see when prices are in a downtrend. You can go as far back as you like in terms of historical price action. When I look at the logarithmic data, you always find that price eventually does get a rally, but what the concern is, or I should say what we need to be cognizant of, not so much concerned, because I think Bitcoin has already sold off significantly from its highs, whereby over the next several months, I'm looking for a bottoming phase, however long that is. And then certainly I really do think Bitcoin is starting to once again become a very attractive prospect from a spot buying perspective. But in the meantime, we have to deal with the fact that, as previous cycles, we can see that once Bitcoin is in this downtrend, it does remain for a substantial amount of time until there's a level of basing around. And generally what I've seen, and again, based upon the sample size that we have, which isn't great, but it's still fairly impactful in the sense where every time Bitcoin pushes up into the bands, the two things that you want to be identifying essentially is look at the dispersion between the bands, okay? Whereas down here, you can see how price is going in a sideways range for the best part of nearly a year. And you see the compression of the bands. You see Bitcoin making an attempt to push above the bands, which fails, but second time around, look at the displacement of the bands, okay? Look at the volatility regime that we're in. We're in a range-bound environment. Not a clear downtrend, but a market that has been going sideways for many months. But this is what we want to observe and just ensure that we're not getting caught out in terms of being overly aggressive into the bands, okay? Unless there's a very good reason to do so. So that was back in 2014, 2015. And again, every time Bitcoin broke down, rally up into the bands, over, back under, and what does price do? Fails to hold the levels, sells off again, all right? Same happened again in 2022. Price, consolidation, okay, drop, consolidation. Let me just expand this slightly. Price drops. Just give me a second. We'll do it this way. Price, there we go. If you just look at a price action here, price drops from the highs. Consolidation, second leg down, okay? Multi-week range-bound environment into what would have been perceived as bullish market structure. Why? Because we are seeing signs of what would have been anticipated as higher lows, right? Into a higher high. Oh, this has got to be bullish now. This is a breaking structure. But really the key objective here is, well, it is a range-bound environment. It is a form of consolidation. Yes, the market could have gone higher, but in the context of price, when you look at the weekly chart here, okay, what happened? All we simply did was essentially trade, okay, above the bands, took out the highs on the left, okay, held above the level for the best part of 1 week, and then traded straight through the level, and that's a sign of weakness that you've got to watch out for, such that if we see a scenario similar to any one of the previous examples that I've given you, then you should know that it's more than likely or probable that we're going to get a corrective move. Whether it's a higher low, whether it's a lower low is anybody's guess, okay? But as you can see where price currently is in terms of, number one, displacement of the bands, okay? Number two, we're pushing above the 12 weekly moving average, going back up potentially towards the 78K level into the 25 weekly moving average, which is now currently trading at the $80,000 level. Okay, so far, are we clear in terms of context? Any questions? It's about as straightforward as it gets in terms of the system that I look to trade and the systems that I look to play nowadays. And if I want to keep it really simple, then this is all I'm doing, you know, in the sense where I've avoided all this unnecessary chop and grind. I don't want to get caught up on the intraday trading aspects for Q1 and Q2 because it is a low volatility regime. Generally, where I perform best are those upticks in volatility when there's an acceleration in the tape speed and price, and there's clearly momentum being developed where you have really nice clean rotations from the range lows to the range highs, as opposed to all of this low time frame chop, which has been clean on the order flow in terms of rotations. Day traders, intra-week traders would have had a very good trading environment, but now we're starting to push above the 72K level. All right. So again, just taking it a step back now, let's just start adding some context to this. Okay. So we know that the 25 weekly moving average, which has been a key level for me, you know, we could trade above the level. Okay. We could squeeze up to 82, 83, 84. If we do, we'll assess how the market reacts. Okay. But for now, as it stands, this entire region here of 80 to 81, 82K is an area that I'm looking to see how price reacts. And if you go back to what I said in the previous streams, that if I'm looking to trade Bitcoin, okay, I don't really want to get caught up on the low time frame rotational environment. As a trader, I want to pick out the best, highest probability trades where I think the market is going to give a key reaction, and such that if the opportunity arises as a trader, okay, I'm not talking about spot investment, but as a trader, I want to identify the best trading opportunities that I can take in the market. And so what is that? And I've clearly explicitly stated on the timeline and in previous streams, feel like a broken record. What is that? Well, it's February's highs, okay? February's range is what I'm interested in trading. And looking for any price movements in or around or above the February highs or February lows, okay? So that's the February high marked out. Fairly straightforward. And then we're going to take the February low. That's the range that I want to trade. Simply put. Okay. And where am I looking to do business here? As somebody who in Q4, I took over 120 trades. And as a trader in 2026, I've only taken 13 trades because the key for me is I want to avoid all of this low time frame, low volatile chop until price can show me that it wants to trade in the upper percentile of the range high of February's range, okay? Or I'm looking for longs from the range lows, all right? And where does the 25 weekly moving average come into place? It's coming in at that 80.7 level at this moment in time. So when you look at the daily bands are fine. We're pushing up into this key level. And the 25 weekly moving average is at that 80.7 level, which is round about just the top of this here. So for me, this is a key area of interest from a trading perspective, because if I see weakness or if I see price overshoot this level, consolidate and fail to hold February's high, then I think that sets up for a trade back inside the range for a mean reversion at least to the mid of around about 68, 69, targeting that mid level. And thereafter, if that breaks down, then we can start looking for price going back towards taking out some of these lows here, potentially the low of February 24th of February, potentially coming all the way back down. And that then is where I start switching context into looking for longs again, okay? So anything pushing up into this level or above is where I'm looking for, not explicitly looking to short. I'm not going to blindly short something like this, okay? I want to see price show me momentum. Either that's going to be, all right, we retest the level and it holds, then fine, we can look for the continuation higher, okay? And we're using anything back inside in terms of local market structure to say, okay, we want to see this local higher low hold. This is our form of compression. Then we can look for expansion. That for me is the flip to go long again, okay? The continuation long. We're targeting this consolidation because this was the consolidation which saw the big leg down, okay? So where did the majority of the supply coming from initially from this move down? It was here. Because there's the range lows, there's the supply sellers push the market lower down, you got a phase of consolidation and the market sold off again. So the two key levels, okay, if the market is going to push up, and if I am looking to trade to the long side, is if you can show me that you can get above here, you might get a deep pullback back inside the range, which is going to get a lot of people shorting, including myself. But what's going to happen as a result of that? If all that aggressive shorting is being absorbed by the market in terms of passive players, where when you see all this aggressive selling, you see in CVD come down, potentially open interest rising or potentially open interest dropping off, but there's a lot of effort to sell price, but it's not really going anywhere, okay? For all the effort to sell Bitcoin off, it's been absorbed by your large commercial players who clearly want to bid out the market, okay, in terms of in the books, get their positions filled and maybe look to lift the offers and push the market higher. So the caveat here is that if the trade does set up to become a short, then you really have to think about what is price doing back inside the range. Because like I said, quite often you'll see this and you think, oh, look, this is a swing fail or this is a deviation. And what happens is price just stalls here. And then the minute it starts pushing up, all these shorts that have been positioned are going to get squeezed. And that's what gives you that initiation of trend continuation higher, targeting the next supply zone. So the two key levels, long story short for me, is what? It's essentially one supply zone here, because this is where the market inflected from, or this was the origin of the continuation lower down. Or secondly, if we see strength and I see a reason to long the market, then I'll be looking to long into this level here, then looking for the cut and reverse and flipping the other way to sell back down for that bigger corrective move on Bitcoin. So as it stands, the two key inflection points are, first of all, around that 78, 79, 80K level. The second inflection point is around about that 86 to 90K level. Where price goes is anybody's guess, right? My job here is not to predict, I think Bitcoin is going to go to 90K, because that doesn't mean anything. How do I trade that? It doesn't tell you anything. It doesn't tell me anything. What I think will happen and what the market actually does, okay, are completely separate thought processes. So ultimately, as it stands, looking at the market, when I look at the structure of price here now on the lower time frames, let's just get rid of the moving averages. We kind of have the context there. What am I thinking here? Well, when I look at price, okay, I had a fractal from earlier. Let me see if I can find that again, because it is an interesting one. And when I look at this price action here that we've made a low, higher low, higher low. Look how market is respecting the lows, okay? Just as we did here, okay? Market sells off, higher low, another higher low, another higher low into a higher high, takes out there, pulls back, shallow, goes for another higher high. But the key thing is here, this is what's beautiful about this price action here, because when you mark out this particular range, using these highs here, because if you look at where the market sold off from previously, where did the market sell off from? Well, when you look at what was key SR, that's the level that we broke through, and we never got the underside retest, right? Until much later in terms of time, where we broke down in November, traded in a range. Look at the level that we come and trade back up into, filling in this inefficiency. Why? Because this is an area of imbalance where you will see that this is what in ICT concepts is referred to a fair value gap, or as I like to call it, an inefficiency, a thin area. This is where market sellers stepped in to push the market lower down. Whether it was longs, okay, anybody who was positioned long from these lows or wherever, with their stop below some given low, well, that's where sellers have stepped into the market, and we never got the clean retest. Instead, we saw continuation lower down. So notice that how this was a key pivotal area, this thin zone here, all right? And when you box this off, when you really try to identify key inflection points in the markets, this isn't always going to happen, but it's one of those areas that I always pay attention to, because I'm looking for some sort of reaction. And if you look at what the market does, literally fills in the inefficiency to this low of the candle, to this high of the candle here. Let me just zoom in and show you much more closely. What I'm marking out is essentially this low here. Just do that in a different color. And this high here. In here is a thin area. Now, when you look at this on a market profile chart, you will see this area as a set of single prints. Okay, it's a thin area where there wasn't really much volume. And generally, when you get those thin areas, it's where you often see at the extreme of a range an inflection point. Okay, so you don't need to draw a 6 foot wide fucking order block. You can get away with really defining the levels that, one, if you see price trading to this level, then what do you need to see in terms of the reaction at the level for you to consider taking on the trade, so that you can structure the trade accordingly in terms of your stop placement, your execution, and then what you're looking to do in terms of the overall context of price. And so that's why I say, like, when you look at what happened previously, I think we could be setting up for something very similar, or at least I'm preparing for that given scenario where, once again, we could see very similar structure, price pushing up. Okay, you can see how price pulls back and continues higher. Well, if you look across the line now, let me just clear the charts. If you look across the line here, and if you look at the range that Bitcoin was in previously, and this was between Friday, the 25th of November, through to the lows here of 30th of January. What happened? Price, once again, once we traded through the level, look at the expansion. Okay, this was possibly, or probably, if I recall at the time, fueled by what? It was fueled by longs becoming forced sellers, okay? Not just shorts opening at the market, but anybody who's positioned long with their stop below this low, because if you look at the inflection points here, okay, where the market reacts and bounces, this candle is an impulsive candle, which tells you that it was a fairly decent volume coming through, more than likely fueled by cascading stops below this and cascading stops below that. And then what happens? Look at where the market gets capped in terms of price. Okay, we never got a clean retest of the underside of this. Why? Because sellers are looking to step into the market and push the market lower down. And people who are exposed to the long side are also giving up their positions. They're in a hurry to get out of their positions instead of suffering further losses. So when you understand the dynamics of what price has been doing or trying to do, well, there you go. Okay, let me just remark that out very clearly, such that this was the last low pre-break that we flushed through, okay? And we couldn't even retest the level. So the inefficiency that we have, and I've covered this in the previous stream, is within this zone here, between that 79.3 to 81k. That's the level that I would really want to pay attention to, such that if I see any weaknesses or any reactions from there, where price looks fairly exhaustive, or we see aggressive buying coming into the level, but passive sellers, so any large entities or commercial players are looking to sell the market, are absorbing all that buying, and there's a large amount of buying at this level. Well, if that can't break through, then that's your first warning that we're starting to stall at the level, and we could get a rotation back down again. Whether it's a shallow rotation before we see shorts being positioned, and then they're forced to puke their position offside because the price pushes higher, that's what's going to lead you to the impulsive move, in my opinion. Okay, that's generally how it happens. That's generally what I see happen. But let's just take it a step back. Let's mark up the zone that I've identified, and I'll show you what this looks like on a market profile chart as well. That's the zone that I've identified, okay? That's where price currently is. Now, if you look at what price did, it just stopped short of the level, okay? And it pulled back nicely into the respecting the previous low. So we haven't broken local structure in terms of if this was the down move which led to the move up, then we've got over the weekend, some level of unwinding and a push back up again, all right? So now the question is, I don't know what happens from this stage, okay? And my job isn't to predict. It's essentially to prepare and understand, where do I want to do my business as a trader? What's the setup that I need to see? And for me, the higher probability setup, and it's a big if price can push up into this zone here, okay, and I see a fairly enough convincing rejection where it exhibits what I've just mentioned, where I'm seeing large aggressive buying coming in at this high, probably fueled by the fact that, well, there's probably a bunch of shorts resting here and potentially here in terms of stops, right? And so what happens once their positions are offside and they become forced buyers to close out the positioning, that's what's going to give you the aggression or the aggressive buying. The key then, okay, is to understand if all that aggressive buying took place, is there anybody else, or are there any large entities or commercial players who are now willing to support price at this zone here, so that any selling that we see absorbed, okay, and then the market starts lifting higher, then you're going to get the breakout up into the 87 to 90k region, okay? That's what I would be thinking. However, the flip side to that is, if I see a large amount of positive delta at the highs, okay, but there's no initiative price action, there's no follow through, such that price very easily starts coming back down again, where it's fueled by open interest declining and CVD coming down, then what does that tell me? Possibly, potentially, that it's an unwinding of positioning here, combined with possibly shorts jumping in as well, and anybody who's been long is looking to take profit, which is causing the unwind, and anybody who's trying to long the breakout has been trapped up here, and that's what's going to give you that bigger move down again, okay, that delta unwinding back down to the lows, or at least to the mid-range. Now, the one thing that I would say is, I've covered the long scenario and I've covered the short scenario. Where it stands, where price is, do I want to sell this here? I'm not sure. I would much rather see the previous week's high get traded. Okay, that for me is a higher probability trade. Very similar price action to what we covered over here. And it may not happen at all. Okay, I may not even get the setup, and I could, or price may just rip through the level and go higher. Okay, I have to be open to that possibility. Just because I want to do some business at this level doesn't mean that I have to take the trade. I can plan the trade. I know what I'm looking for, but I need a reason to execute the trade. And if I don't get my reason to execute a trade, part of being a good trader is, number one, you recognize that, all right, this was the zone where you wanted to do business, but you never got the trigger. So why'd you have to take the trade? Okay, you need the reasoning and understanding to why you are looking to actually execute the trade, as opposed to, oh, we've just run these highs, so I think I'm just going to short this here blindly. If that's your reason for selling the market, then that's a dog shit reason. You've got to have more conviction as to why are you looking to sell the level, or why are you looking for potential continuation for the market to go higher, because you're seeing signs of a compression, you're seeing signs of absorption, you've seen a very aggressive attempt to sell the market lower down, but it's not moving. For all that aggressive selling, price is not able to shift lower down. It's been absorbed by passive players. That's your first sign that, hang on a minute, this is probably not the shorting opportunity that I thought it was. I've got to be ready to cut my position and flip long above this high here into the origin of the down leg, which is there. All right, so that's the flexibility and fluidity that I'm looking for. Is that clear? Any questions? Now, everything that I said could effectively not even play out, because no matter what I've just said here in the last 10, 20 minutes about looking at this for an inflection point, well, what do I do? You know, the question is going to be, XO, you talked about selling this level and price never got there, you know, but you said you wanted to sell this or you would have longed this. And how do you then deal with the fact that, look, price has now dropped. I should never have listened to you. I should have shorted it myself. Well, go ahead, do what you want. But the point is that, look, there's always a way to get on board of a trade, okay, whichever way you look at it. Now, if we mark out February's high, there's February's high, and there's February's low. The two things that I want you to think about now is the fact that the mid of the range is round about here, okay? Give or take. That's the range that I'm looking to play, ultimately, all right? Now, with that, you've obviously can bring in your range quarters as another pivotal point in the market. Well, there's your range quarter to an extent. Very basics of range trading. Just mark out your levels. Mark out the mid, the high, the low, and the quarters, okay? And so already, right, I'm thinking about the fact that, well, what if we don't get the push up? Then what? Then it's a case of, well, what day is it today? It's actually Monday today. So what are we actually developing today? We are developing Monday's range. So that's the next aspect that I want to bring on the chart. Monday's low here, which is also confluent with the weekly open. And then what do we have? The developing Monday's high, which is where it's coming in at this level here. So far, Monday's high is yet to be confirmed, all right? But we are only a few hours away from that being confirmed. So that's Monday's developing high, I should call it. So what gives me conviction or belief that if we are going to go for the highs, what do you think the obvious statement is? That if we're going to push for the previous week's high, which is this level here, right? We'll do that in green. What do you think the logic or reasoning is to give me belief that, right, we're now ready to attack the highs and we're probably going to trade into that? Potentially, we could trade into the 80K level. That's something that I've been waiting for. What's that going to be? It's going to be an acceptance above Monday's high, isn't it? Such that if we see price push up, consolidate, and go for the highs, then it's game on. This is going to be the game on, where it pushes up, doesn't fall back into Monday's range. You might see it come back inside, short-lived, acceptance back above, then we can go for that. Then we can say, all right, it's game on. We're probably going to take out this, and then we can probably make a push. We may not take out the highs. We might get very close to it, okay? When there's something that you have to understand when it comes to market structure, and when there's signs of weakness, quite often, more often than not, we never quite take out the high. Or in a bullish context, if I can find an example of this in an uptrend, okay? Look at this. Here's a classic example of that, right? Look how close the market comes, because you as a trader and so many of us have been taught, oh, look, swing fail and then look for the long. But I'll just dispel that fact, because if you look at this here, very subtly, look at this low here. Look how close price comes, but it fails to take out the low. Then it rallies, and then look at it again, comes down again. Doesn't quite come anywhere near these lows. Now, a typical setup would have been wait for price to take out the lows, sweep the lows, get back inside, and then look for the long. Well, when you've got a market that's showing strength, you're never going to get that perfect setup. And sometimes you have to just step in front of it, knowing that, not blindly, but with reason, why are you stepping into this trade? Oh, because I'm seeing a level of absorption and aggressive selling being absorbed at this level. So clearly there's a level of interest of the market here. So therefore, if this level can hold and we start pushing away, then I can execute the trade up here with a stop potentially below here. Knowing that I could get stopped out, which is fine, and the market could continue lower down, or I get stopped out and I see acceptance back inside the range. I have another attempt at longing this, placing my stop below this low, and then I'm looking for the move up, okay? Because that can happen. And that's just variation. That's just variance, sorry, not variation. That's just variance of the markets. You can't predict whether you're going to get a run of the lows or not. But you should have in your mind that, okay, I'm willing to take a small loss on this position. I'm willing to accept that I could be wrong. But if I'm wrong and price does come and take me out, what do I need to see? I need to see price to show me strength to get back above the level, and I'm stepping straight back into the trade again. The caveat to that is you could probably go for wider stops, but then you are skewing your risk profile. Maybe you're playing the probability of the trade, but you're not able to get as much size. But if you can get nice and tight in terms of your stop positioning, then sure, you can size up more convincingly, okay? So you can put more size on, still risking the same amount as opposed to with a wider stop, and therefore having to risk, you know, your position size. You can still risk the same amount with a wider stop, but your position size is not going to be as large. So when I come back to price action here with current developments, what I'm trying to say is that with where price is, okay, with where price is currently developing, I don't know if we are going to push up and stop short of this level here, okay? But the one thing I will say, and I just want you to think about this, this is where execution comes into play, all right? We're not even talking about order flow here, just purely the dynamics of price action. Get your price action concepts right, understand why you want to execute or where you want to execute, and try to play out the permutations or combinations of what could happen if price was to go for these highs, right? So let me just give you some food for thought. Again, this is under the presumption that we might reject from the 81, 82K level. What might that look like? Well, in my mind, what I'm thinking is, okay, there's two scenarios. If we're going to sell off, so context, if we are going to sell off for a mean reversion back into 70K, what could that possibly look like? Well, number one, we could just break down from here. Fine, okay? If that happens and I see price trading through the range quarter, I'll be looking for an underside retest into this level here, okay? Then I can think about, all right, if we see support here or price trading below and back above, then I can think of a long back to the highs, all right? That's certainly a scenario that could happen, okay? But preferably, like I said at the start of the stream, I only want to do my business at the extremes of a range. If it looks like a range, if it trades like a range, then respect it as if it's a range until you need to flip your bias such that if we see a push up, pull back, consolidation, another push up, pull back, that's going to be your breakout, okay? Compression How often have I talked about, the power curve clearance thrust pattern where price keeps compressing, keeps making higher lows, okay, but unequal highs, and it compresses and it compresses, and then you get the expansion out of the range. So that's certainly one pattern that could play out over the next 2-3 weeks, okay? But if I'm looking to sell the market and I see reason to sell the market, this is where sometimes I have two attempts at selling the market, or inversely buying the market, okay? The concepts are the same. It's interacting at the extremities of the range. So here's where I'm thinking that such that, all right, look, if we do get acceptance above Monday's highs and we can hold, then maybe we get a run up, take out this high here and trade into here, just stopping short. We don't quite take out the highs. We don't fill out that inefficiency that I would love to see get traded, okay? But we stop there. But then what happens? Price does something like this. Compresses, and then you get the expansion. What do you think is going to fuel that move? Well, the fact that more than likely it's going to be stops resting there, okay? And then we get the squeeze up, fill in some of the inefficiency. Maybe it goes higher into the 12.25. Remember the 25 weekly EMA at around about that 80.7 level, which is here. We get an overshoot of that, and then we get no continuation. Then we see price breaking down, okay? And so you have to be prepared that if I'm looking to sell this market, I know that the minute price starts pushing above here, I've got to get out. Because at this point, I don't know whether this is going to be continuation higher or whether it's just going to be trapping late participants looking for longs, okay? And anybody who's then looking to buy the pullback on top of the range, they're also getting long. Well, guess what? When it bounces and it rolls over, all this position has to unwind back down. And when you think about that, it's almost like a 1, 2, 3 drives high, which is one of my favorite setups at the range highs or the range lows, where how often do we see price? And I think if you go back to last year, we saw a very, very similar structure play out where, look at this. All right. This was a classic example of a 3 drives low, in essence. 1 push down, rally, 2 push down, okay? Market does what? Rounded retest here. But this is almost a 3 drives. And quite a lot of people would have got bearish at these lows, right? Because they see price, oh, look, price is pushed down. It's got back above. Oh, shit, we're back below the level again. So this has to be bearish. No, not necessarily. So you're waiting to see the order flow at these extremes. And for me, when this happened at the time, the order flow was clear because this was all aggressive selling. There was a fuck ton of selling here and a second attempt, a really aggressive second attempt to push the market lower down. There was some huge selling activity. That doesn't necessarily mean that shorts were piling in. Okay, the key word that I'm using is selling, not shorting. And the reason for that is because quite more than likely, as soon as price rallied above here, stops either get very, very tight or too tight. Okay, and such that they get run over once again, and all that aggressive selling comes back in again, being absorbed before the market then finally decides to push away. All right. So the key point here is again, look how many times price tests this range low level here. Okay, 1, 2, trades through it, 3. So this is variance. This is something that you can't control. If you're trying to get a tight stop, then you have to accept that you may get stopped out. But what are you looking for to get back into the market? And so the same concepts are essentially applicable here once again, such that what if we do get a, if that's the first drive, then we get a second drive higher, okay, and then it's shallow consolidation, and then a third drive higher, but it's a failure where we filled in this inefficiency. Then we get the drop. So for me, it's going to be, okay, you swing fail this level here for the 3 drives, and you show me absorption of aggressive buying and sellers absorbing all that aggressive buying. I'm interested in waiting for price to get back inside this previous swing high, then executing my position. If you can then show me that you can also get below this low here, I'm adding to the position, and then I'm looking to take it down, okay? Execution point number 1. I'm not trying to catch the absolute top. I'm waiting for signs of absorption at the highs. Show me weakness to get back below this previous high. Then I'm looking for, okay, I'm going to add more to this size, add more size to this trade because I really believe that the probability is in my favor now that I can look to trade the market lower down. Okay. So sensible position sizing, sensible scaling of into a trade. You're not trying to fire your whole load in one shot at the highs and then get blown off, okay, in terms of your positioning, and you've taken a big loss. You're waiting for the confirmation, okay, to react for the information to tell you that, yeah, this is a sign of absorption here. But like I said, I'm only going over these scenarios because I'm not saying that a 3 drives has to play out. I'm just trying to give you some context as to how markets have behaved and how I've dealt with this in the past, where I know that sometimes I might take a couple of attempts to get the market right if I'm trying to get really tight. Okay, if I want to be really conservative, really conservative, right, I could simply structure the trade in such a way where it's going to be, okay, I'm looking for a short anywhere between here with a stop up at this higher 85k, and I'm looking to target the lows, all right? But when you look at the risk profile, it's not great. It's not something that I would probably want to swing trade for a multi-week trade for a 1.4, 1.5 hour trade. I'm looking to get far more refined, whereby whether my execution is here, okay, and whether I can tighten up my positioning, and then I'm looking to add to the trade. So I'm doubling up my size, yet my risk is static at 1 to 2%. That's how I'm going to achieve my big winners. Okay, you've got to really understand dynamic position sizing and how you can scale into a trade. And as you're trailing your stop loss because you're adding more size, you're going for the jugular because you believe the market is in your favor now for what you've initially set out, as opposed to being very static, you know, whereas, okay, let me just get filled on the backside and that's it, I'm not going to do anything. If you've got conviction that the market is now ready to correct or give a correction back into the mid, why would you not add size to that? Okay. Now, where you add size has to be sensible. You can't just add size as you're getting close to your target because now your conviction is high. You want to be being slightly more, taking more risk when you know there's a slight probability in your favor, but the reward is such that it makes sense to actually double down or add another third of your position size and manage your risk so that your risk stays static. That's how you can accelerate the growth of your account very, very quickly, okay? So far, that's kind of the concepts of price action. Now, whether we get a push up, I don't know. Whether we reject from Monday's high, I don't know. But I know where I definitely want to trade. And I know that if we start getting below the mid-level and underside reject, then I'll probably look for a separate trade, but I won't be risking 1 to 2% of my account. It's probably going to be 0.5% or quarter of a percent, okay? Because once again, we're not at the extreme of the range, and I much rather size up at the extremes of a range. And when I say size up, I'm talking about getting really tight, and therefore it allows me to size up significantly, yet I'm only risking 1%, okay? If you don't understand what that means, then I highly suggest you start getting to grips with position sizing, dynamic position sizing, and why risking 1% of your capital doesn't necessarily mean it's a small amount. You can size up, yet only operate at 1% risk, okay? And if you don't understand that concept, then you've got ChatGPT, you've got Claude, tell it to go over some scenarios with you. All right, let's move on. So let's look at this from a market profile perspective, shall we? Let's look at just focusing on this area here. And when I bring on the market profile chart, I hate TradingView in all honesty for this reason, because the resolution is shite. But look, ultimately, let's just strip everything back. Let's keep it really simple. This here is February's high, all right? I'm going to mark this out. That blue level, or I'm going to change this into white, is February's high. And February's low is a thin tail here. One thing that I want you to pay attention to is, if you look at where price is, okay, this is why I really enjoy market profile. Well, two things I want to talk about here is, well, first of all, remember that thin inefficiency that I talked about, that thin zone? Look at where the single prints are. Look at where the market reacted from last time. Remember when we sold off from this level here. When we broke down, all right, through this level, and we failed to get any retest off this level, look at what cap price here. But why? Why did the market sell off from this level here? What could we have seen on this chart to give us belief that, hang on a minute, this is probably likely to be a good selling point in the market? We can't tell. We don't know by looking at the candlestick chart. But when you look at the market profile here, what do you see? Look at this profile, this weekly profile. See these single prints? Look at the edge of the single print here. That's essentially what was capping price, where we've traded up into there, right on the ledge of the single print. And that those set of single prints or this thin area, well, there are your single prints there between 79.5 and 80,000, okay? But more importantly, when you just take a step back, recall what I said about that thin area? Well, this is the thin area of or thin price efficiency that we see that I think could be a zone or a level that we want to pay attention to if we get a push up into there, okay? And if we do, then at the upper bound of that is the value area low. That's a fairly reasonable node where we might get an inflection point. So it's, if we do push above 80k, then I think it's anywhere between 80 to 82k where I'm looking for signs of absorption, okay? Or signs of really not much time being traded in terms of time and price, not a great deal amount of time. And what does that mean? That essentially means I'm looking for some sort of tail, okay, where it's going to be like this, where if that's your profile, it's going to be very, very thin, okay? Very thin price action. Very little time spent, and it rejects very, very quickly. Doesn't stay there for 4 or 5 days, but it trades up in there in a day or so, and within a few sessions, it's starting to roll over again, okay? That thin profile is what I'm looking for. Very similar to what we saw how when Bitcoin sold off, look at this thin tail here. Very little time. Each one of these TPO blocks represents 30 minutes, okay? Or less, okay? So price spent very little time at this tail. And so what I'm looking for in terms of market profile is, number one, can we trade this thin inefficiency, the single prints, taking out the high of February? And number two, let me get rid of this. In terms of the shape of the profile, okay, in terms of execution points, if this is February's high, what do I want to see? Well, once again, I want to see that move where it pushes up and the tail is really thin. Okay, you get back under February's high, or I see absorption, aggressive positive delta here with some stacked sells. That's a clue for me to think, all right, this is probably worth a step. Knowing that we might push down, but we could push back up, that's fine. I'll take the loss. I'll wait for price to squeeze higher. You show me weakness here and absorption. Then once we start breaking down, then I'll add to the position, come through February's high again. I'll add the second position, then I'm looking to trade it back down into 72k, 70k, 69k, all right? So that's the one part that I wanted to highlight why, again, when you look at the market profile chart, it tells you information that isn't immediately visible on a price action chart. Because this is what capped price. We couldn't simply retest where we broke down from because, well, we've got a thin area, okay? Sellers are stepping into the market. We couldn't even fill in the single print. So now I'm thinking that, all right, if we do get up there, then I would like to see this inefficiency filled and probably the top to be capped by 82 if we're going to push up to 82. And then if you remember what I said about the moving averages, well, if we start getting back below the 25 weekly moving average, that's just adding context to the trade that now the probability is in your favor, all right? Now, in terms of current day price action, here's what's interesting. This is the previous week's market profile, all right? We opened up at 70,000. We traded all the way up to 78,000 on Friday. And then Saturday and Sunday and parts of Monday we sold off. So that's the previous week's high. That's the previous week's low. Look at where price is trading. What is price essentially doing? we opened at the value area low on Monday. This is a weekly open here, okay? Where did we trade? This is classic market profile trading. What have we just done? We've just traded to the other side of value in terms of value area low, opened up, went straight to the value area high. But what's interesting for me at this point is that if I believe the market's going to go higher, then I really don't want to see price trade back below the 60K level. If I see price tomorrow or Wednesday push up back above the previous week's value area high, and we can break through this thin area, because if you look at what's capping price at the moment in terms of the current weekly price action that we see, well, this is a thin area that's capping price, isn't it? Okay, that's the rejection where I'm sure traders have probably sold the market in anticipation for a move lower down. Personally, it's not a level that I want to trade, because I believe that, look, if the market can hold its level here, then we've got this area to fill in, and we can, once we can get above this, then that opens the segue or the gateway to take out the previous week's high, and then we've got the single prints up here. Then I'm interested in doing business, okay? Then I'm interested in doing business. Either it's going to be a short or it's going to be a long. It depends upon the reaction and the order flow and the data that I see at that level. All right. So that's what I really wanted to cover from a market profile perspective. Is that clear? Any questions? And meanwhile, whilst we're here, let's just look at the monthly profile as well. That's February. That's March. And you can see all we're doing is just trading within a range, okay? And because this is overlapping value, I'm going to form or create what is the 2-month composite, where I merge March's profile, monthly profile, with February's monthly profile, okay? And then upon doing so, you can see now that February, March composite value area high is coming in at 71.5. And February's February-March 2-month composite value area low is coming out at 68K. Why is this important? Well, if we do take out February's high, and if we do trade above February's high, get close to February's high, and we reject, well, it's going to be, number one, a prime area in terms of targeting a take profit zone, right? Number two, if we trade through this, push back above, and then fail to hold, where do you think we're going to go? We're going to go from 71 all the way back down to the other side of value, and potentially, if you then start trading through 65K, then we've got all this area to fill in, okay? All this thin price action, where I don't think there's going to be much until we get somewhere down to this tail. Then we can start thinking about, all right, here's a logical area where we can now start thinking about longs again, whilst the majority of participants are getting bearish, okay? All right, I'm just going to take a break and read the chat, so just give me a second. Just want to make sure I've not missed any questions or any meaningful questions. Hey Nelly, hope you're well. All right, let me show you something that's really important. And this is something that I cover in the mentorship as well, by the way, if anybody's interested. It's going to end at the end of June. Like I said, it's practically free to join. So if you want to, you can do. And I'm just going to go over some of the things that I cover in the mentorship as well, and how I look to execute. I think execution, understanding trade execution, is one of the areas that takes real time and effort, because not only are you dealing with your emotions, you're also trying to figure out why are you executing the trade, as opposed to it being an impulsive psychological behavior, fear of missing out, greed, okay, whatever it is. Now, essentially, what I like to do is when I'm trading using the DOM and the ladder, and I always use the DOM and the ladder for confluence on Bitcoin, is that what am I looking for? What does a possible sign of absorption look like? Okay, well, very simply put, I mean, if I just expand this chart here, and if you look at the price action of Bitcoin, let me see if I can find a good example. Okay, now what I want you to pay attention to here is, first of all, understand, okay, that what am I looking for? What does aggression look like at the highs? What type of structures am I looking for? I'm either looking for a B-shaped profile or a P-shaped profile, okay? Where on the B-shaped profile, there's a lot of aggressive positive delta, and you're going to see this as this type, sorry, let me see. When you see a B-shaped profile at the high, quite often it's a candle that looks like this, okay? Heavy positive delta that gets rejected and price closes lower down again, okay? And then the opening the consecutive candle that follows this, it's going to be, it opens, you might get a push up, okay? And then closing back down, candle body, okay? That's what I want to see to give me signs of, all right, we're rejected from above, we've got back below this, that's probably where I'm going to look to execute. Okay, just a very, very simple example. Doesn't always have to be like this. But what I do want to show you is, well, what does absorption at the highs look like? What can we infer? What type of profile shapes am I looking for? Well, here's a classic example. And I covered this in the mentorship earlier today, and I don't want to spend too much time talking about this, but just to give you something educational. You look at these highs here, okay? Now you can imagine that we've come and traded this high. What's happening? You're going to get sellers that are going to step into the market, okay? Here's a classic example of that. Look at that. We've come along and we've taken out this high. This failed, but we've come and taken out the highs, right? What immediately happens? Look at the thin tails that are up at the highs here, okay? Look at the delta, the blue delta, the positive delta up at the highs. Sellers are stepping into the market. There's a lot of aggression coming in, especially down here. But look at this, market holds off. Even so, there's a 58 million buy delta here. Market pushes up. Okay, anybody who's short this is probably going to get run over or closing out the position. Market tries to sell off again. And so when you've tried to have one attempt at selling this and you've been stopped out, you're probably going to take another attempt at this and think, you know what, I'm just going to put my stop, you know, I'm going to execute them with a stop somewhere over here. What does the market then do? The minute it pushes above that level, here's what I want you to pay attention to, is look up top. Okay, look at all that aggressive buying at the highs, okay? 9.3, 6.2, 28, 5.1, 12, 8.3, 11, 6.7. What profile shape have I talked about? Where it's almost making a P-shaped profile. There's a P, but look at where the candle body closes, okay? Market opens, closes higher. But then look at the next candle, it sells off, okay? What's capping price to the upside? All this positive forced buying or longs piling in at the highs, or whether these are shorts closing out. That's the inflection point that I want to see. Heavy topside delta with no continuation or any passive bid holding up price. Whereas if you look here, when we pushed above and we rejected, did we see continuation lower down? No, we didn't. It was supported by a bid. Again, what did the market then do? In this candidate, it tries to sell off, but look how quickly it's bought back up again. This is a sign telling you that you don't really want to be fading this, because any attempts to sell it are being bought back up again. And then look what the market does. Any shorts above here, the minute we break above this high, look at all that buying order. Look at all that aggressive buying that comes in. A combination of stops and a combination of day traders or breakout traders looking to trade this higher and continuation higher into forced positioning. Okay, you are looking to trade inefficiencies in the market. Then look at this candle here. If this high volume delta or this high node, okay, is going to be capping price, well, we don't really want to see any signs of absorption, or you know, what we're looking for is essentially for the market to start breaking down And what I would normally do is use this previous high. If you can get through there, this is where I'm wrong, because if I start seeing price push up above this level, I have to cut the trade here. This is where I'm looking to execute. Anything under here, I'm in the trade, okay? That's essentially what I'm looking for to get into the trade, all right? And the rest is history, okay? Classic signs, again, you can just visibly eyeball that. You can see the heavy delta up at the top, rejection, candle down, nothing in there to suggest price is likely to go higher, and we get the unwind, okay? All that positioning of continuation is now puking. Look at that. Profit taking, and anybody who's aggressively long is now unwinding their positions, and that's why you get these fast moves down, followed by often declining open interest, CVD going down, and then as price continues going down, open interest generally rises, whether it's a combination of shorts or whether it's those individuals or traders looking to open long positions, until the market then has its next inflection point. All right. So that's one thing that you can really pay attention to. And again, if you look at what happened on Friday, when we traded significantly higher, once again, look at all that positive delta. We break up, okay? Look at this aggressive expansion to the upside here from 77 to 78 in terms of relative to the time frame. Look at all this aggressive selling down here, right? But look at where price closed. We tried to sell off, but the price closed back above. All this aggressive selling, okay? Whether it's positionings or whether it's positions opening or not, or whether it's profit taking, I couldn't tell you without looking at the open interest of CVD, but I can tell you explicitly by looking at this, this is not ready to break down. Then what happens? We get another thrust up. Now look at the positive delta up at the top, okay? This is on Friday. 5.4, 32, 2.4, 10, 22, 13, 13, 6.7. But look at the wick. See that rejection? All this positive buying delta, forced buying, late longs piling in. But look at where we close. That's your first sign of rejection. And secondly, the fact that we've just closed back inside this previous very high positive delta. The second candle now trades below. This is where you can start thinking to yourself, okay, if I'm right on my idea, this should really be capping price. So I can start thinking about, okay, if we're going to close and start selling off, this is where I can start looking to add to the market. Okay. What happens? We get the unwind. Where do we get the unwind to? Back down to the origin of the move, okay? And lower down. All right. This was the origin of the move up. There's your unwinding of positioning. That in itself is a very good trade. High delta, look at the wick. Close back inside, below the previous low. Continuation. This is where you can start aggressively attacking the market. Anywhere in here. Stop. Obviously, you don't really want to see price. You don't mind price retesting this level, right? You don't mind price coming up into here, but as long as it rejects, you're good. You're good to go, okay? The minute we start pushing up, get out the trade. That's how I would do it. Okay, is that clear? So just how I identify delta and why it plays a part when I'm looking for extremities. Now, what I'm basically looking to do, again, this is where, if you recall what I said about price trading into the 80, 81, 82K level, well, guess what I'm looking for? That's essentially what I'm looking for now. Signs of really aggressive delta at the highs, just like we saw over here, all right? Just like we saw over here. Look at all that positive delta and look how price closes below this low. This should now cap price, which it did. Any retest into there and rejection is reason for me to step into the market. I know I'm wrong if price starts pushing back above, or there's aggressive selling, right? There's aggressive selling where what? Where it gets bought back up again. That's an indication that, hang on a minute, the market isn't quite ready to break down. We could just start distributing further or pop another leg higher. Small subtleties that you can look for in the market. Okay. Any questions? So when I talk about trading level, okay, what I've basically explained to you is that, look, as a trader, I would like to do business at this zone, okay? Now, just because, I'm going to repeat what I said earlier, just because I'm looking to do business at this zone Doesn't mean that, oh, Exo, you said you were going to short it. No, I need to see a reason to execute the trades. And if I don't get the trigger, okay, a lot of you have always said to me, Exo, how do you execute your trades? Can you go into execution details? Well, this is what I do when I'm looking for executing. I'm not just going to blindly sell the level. I want confirmation to suggest that the probability is in my favor. That's a lot of bad positioning at the highs. I want to step into the trade. It's exactly the same shit at the range lows, okay? The concepts are essentially the same. You're looking for absorption and or exhaustion. Okay, and this is just the basics of order flow. It's not rocket science. There's nothing that I've invented. It's just common market dynamics and understanding market microstructure. If you understand it and you apply it and you observe these patterns playing out, then eventually you'll know what you're looking for, okay? It's not difficult. You've just got to put the time and the effort, and you've got to be methodical about your approach such that you can read the market in real time. Not, oh, look, there's some highs here and there's a thin inefficiency. Let me just randomly, without any fucking reason, sell this level because, oh, I think it's a good sell. I think it could be a deviation. Think is not good enough. Well, if that's your reason for execution, then I'm sorry, but you've got problems. Really understand why are you executing a trade. Add to the probability of being right, okay? You only need a slight edge to become a consistent, profitable trader with a good level of expectancy. Now, I only operate at around about a 42% win rate, but I'm very good at losing in the sense where my losses are very small. I don't take any significant large losses, and I haven't done for a while. Any questions? Right, and again, I'm just going to quickly finish off on a final note now. When I use the DOM and the ladder, when I talk about tails, again, let me just bring this over to my screen here. 1 second. 5 more minutes and we'll wrap up the stream. So when I go back to Bitcoin, again, I think I've covered this example in the past, but I'm just going to go over it one more time, okay? When you look at Bitcoin here at the all-time highs of 125, okay? What happens? See this price action here? You cannot know by looking at this whether this is bullish or bearish, okay? But why did I sell 125s? Why was I confident in shorting this level? And this was in hindsight. I actually posted this about shorting this level on what I believe is the 5th of October. Well, let me show you why. Okay? When fading range extremes, you want volume tapering at the tail. So what does that mean? Remember how I've talked about if that's a volume profile, that's where I want to see at some resistance level here with heavy delta at the highs. You show me that. That's point number 1 where I'm thinking, all right, this could be an inflection point. Point number 2, you show me acceptance back inside now with an unwinding of positioning. I know I'm in a good trade and I can take it back down again. All right. So acceptance, so volume tapering at the tail signals exhaustion and lack of follow through, often a result of positioning forced to close out with no follow through. Okay. Acceptance below, ignore that, ignore this, but I think I'm just going to jump straight into the DOM and the ladder. You can go have a look at the tweet. The date of the tweet was, when was it? Let me get rid of that. Just 1 second. Study it. It's a classic example that I illustrated, and that was on the 5th of October. Okay. And when I show you what that looks like on the ladder. And this is why I enjoy using the ladder in real time, because the dominant ladder is the heartbeat of the market. It's real-time action. And what do I have? I have a volume profile. I have the delta. And look at the tail. Look at the thinning of price up at the high at 125. 3.4, 22 million, 57 on the bid side, 50 million, 100 million. And look at the lack of selling in comparison to the bidding, all right? Very heavy buying up at the highs, but there's no continuation. Look how thin price tapers very, very quickly. And the minute we get through 125s, we're back down again to 122s, okay? This is what I want to see when it comes to fading the extremes. Now, if I show you the footprint for that exact same price action, okay, a few days, I think it was a few days later, once again, it's the same patterns that repeat that I'm looking for. All right, it's not going to let me bring it up. Let me do it this way. Look at what happens, okay? Notice how price, okay, pushes up. Look at all this aggressive selling. And again, 31 million, but look at where price closes. You've got a 27, a 31, okay, but price closes high. Look at all this aggressive selling again here. And again, 32 million, 30 million, 21, 3.6, 7.5, 100 million, 78. There's almost 200 million, 200 plus million dollars of negative delta. Yet price can only go this much for all that effort. That's telling you, this is what I mean. Like sometimes when you see the market push up and you see all this aggressive effort of trying to push the market down, somebody's absorbing all this buying. And then look how quickly price pops higher. And then you get the big, heavy unwinding of position. And for me, a lot of this delta, a lot of this aggressive buying was shorts being forced to close out their position, which caused a new all-time high in Bitcoin after being led by some initiative driving of price, okay, of the offers being lifted, and then you got the shorts being squeezed. That was your offside positioning. Whoever filled this has done a really good job. The price is traded lower down. This is what I'm looking for, okay? All right. These types of setups, these types of flow to give me a reason to think, hang on a minute, this could be a very good trade execution. If this is going to cap price and all this was driven by shorts closing out, then where the fuck are the buyers? And it's the same concept on the opposite side of the range, on the range loans. If you see all this aggressive selling and it can't continue lower down, where are all the sellers that want to take price lower down? And you see it being absorbed by passive buyers. Same concepts on the other side of the range. Okay. So I think I'm just going to end it on that note. In terms of price action, in terms of how you can identify these patterns playing out again and again and again. And that's all there is really to it. That's all I have to share in today's session. If there's any questions, then please do reach out to me. Like I said, I cover all of this, and I will be covering a lot more of this in the mentorship. So if you are interested in joining, like I said, it ends in June, and I think that's it. I'm not going to run any more mentorships on this side of the year. You get access to all the resources and videos and whatever else I've probably shared. Information is in the description of the video. You're more than welcome to join. Speak to somebody else who's probably joined. You can talk to them. And like I said, I don't charge any money for it. Okay, it's just in partnership with Prime XBT. Any final questions, or are we good to go? I think I've been on stream for the best part of an hour and 20 minutes, or an hour and 10. Okay, really take your time to study what I've said. Take notes, get the transcript, throw it into ChatGPT, ask it to explain some of the concepts to you. If you don't understand it, start learning about it. You've got AI at your disposal now, okay? £20 subscription for Codex or Claude. Probably one of the best investments that you can make if you want to learn how to trade. All right, that's it for me then. I think the next stream I will have is probably going to be for members on Thursday or Friday, for those of you who are in the mentorship. And then after that, I guess the next public stream will be around about 10 days time or 7 days time on a Sunday, or yeah, probably this this Sunday coming, we'll have another stream. I'd like to see what price does, whether we take these highs and push up, or whether we push up, reject with heavy delta, and lack of continuation. That's going to be the sell, because like I said, the key thing for me is, well, considering that the 25 weekly moving average is around about that 80.5 level, if we push above, filling this inefficiency, and there's heavy buying delta that's trapped, that's the unwind down, okay, into the mid level, range low, range high. That's what I'm looking to do. All right, take care. God bless. Have a great week ahead, and thank you very much once again for tuning in.